Hello and welcome to Managerial Accounting. The learning objectives of this first video are 1. To explain the difference between managerial accounting and financial accounting. What are the distinguishing features of managerial accounting? And 2. To identify the three broad functions of management. Objective number 1. Managerial accounting is a branch or a field of accounting that provides information to managers. Managers of corporations, managers of sole proprietorships, managers of partnerships, and managers of government or other non-profit organizations. What is the difference, you might say, between managerial accounting and that financial accounting course I have already taken? Well, to begin with, there's a difference in the end users, the users of the financial report, of the reports that we produce. The reports produced in financial accounting, the balance sheet and the income statement, are for people outside of the business, external users. People who are stockholders or shareholders of the company or creditors of the company or government regulators. They all require financial information of how well the business is doing. And that financial information is provided by the financial accounting function. The reports produced in the managerial accounting area are only for the managers of the business. They are the internal users, people inside the business, managers who need information in order to carry out their managerial role. Also, the financial statements needed to be produced in financial accounting once a year, that's all, annually. However, the reports produced for managers are as often as the managers need those reports for the information they need in order to carry out their duties as managers. Thirdly, financial accounting follows generally accepted accounting principles. There's a whole series of rules and regulations related to how I present the financial data. In management reports, though, they are very detailed and they provide information for managers, whatever information the managers may need to manage. Well, what information does a manager need to manage, you may ask? Well, let's look at the three roles of managers. First, a manager must plan the activities of the people they are responsible for in order to maximize short-term profit market share. In short, to add value to the business. That's a manager's role, to continuously improve and do that by planning. Secondly, a manager must direct on a day-to-day basis the activities of an organization to make sure all the employees are doing or carrying out the roles that they are responsible for. Managers in this function also hire and train employees. They must ensure that everything is running properly. Thirdly, a manager must control the activities to make sure that the division they're responsible for is achieving the goals that they have set. And if not, then they must change the activities in order to achieve those goals. Now, in each one of these three functions, a manager needs information and needs it on a day-to-day or very frequently basis in order to either help them plan or direct or control. So those are the three functions of a manager. A manager is doing all three every day: planning, controlling what's going on, and directing employees at the same time. Managerial accounting provides reports to managers in all functions of a business. These different functions can be viewed as the value chain. Okay? The value chain's first function is to design a product or service that they're going to sell to the customer. Then the next step in the value chain is to acquire the raw materials. This would be a purchasing manager. Then, once we have the raw materials, production. And here you'll take a course in operations and production managers and so on. Then once the product is produced, the marketing boys and girls have to get together and start selling that product and marketing it. Once we've made a sale, then we have this whole delivery function. We must get the product to the customer when the customer requires it. And we follow up if there are any problems, because what we want in the end is a completely satisfied customer. So here you have 3 different functions, all thought of as a chain. They're all connected. They're all operated by different managers. All these different managers need information in order to manage, and therefore managerial accounting is about providing them with reports on research and development, on production, on selling, on delivery, and everything else. These are managerial reports. Managerial accounting today is a set of management tools that have been designed to help managers. And many of them you may have heard of, but if not, now you will, by the time you graduate, have heard of many of these tools. For example, just-in-time inventory, management accounting tool. Total quality management. Theory of constraints. Enterprise resource planning. These are all tools developed in management accounting. Activity-based costing, which will be part of this course. And lastly, balanced scorecard. These are all tools that you will take in your business program, but there are also other tools that we will take in this course, such as cost, volume, and profit, which is CVP, or job costing. These will be tools that you will learn in this course. Relevant costing. And most importantly, budgeting. A budget is a management accounting tool, not a financial accounting tool. And we will take 2 chapters on budgeting, because budgeting is one of the most important management accounting tools. And that concludes our first video in the introductory chapter of managerial accounting. We'll now look at manufacturing costs in the next video.